Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 31st of March. I'm Daniel Lam, your host for the podcast. We've just published our global market outlook called US Exceptionalism Interrupted, to reflect the relatively lackluster performance of US assets so far this year. Now, in our view, the era of US exceptionalism is not over, but merely on pause. But it would be interesting to take a look at the performances of asset classes during times of weaknesses in the US. So as the global economy grows more interconnected, US-only recessions are rarer, but not unprecedented. According to the World Bank, there have been only 4 global recessions since 1950, each of which has coincided with a recession in the US. However, not every US recession has led to a global recession. In fact, the US has experienced 6 additional recessions independently since 1950, with the recession following the dot-com bubble burst around 2001 and the initial phase of the global financial crisis, the more recent examples. There are clear distinctions in terms of financial market performance during periods of US-only recessions and global recessions. Now, during a US-only recession, US equities underperform their global counterparts. The Fed typically responds by cutting interest rates, thereby helping the performance of US government bonds. However, given the absence of flight to safety from abroad, the US dollar typically falls alongside US equities, while gains in US government bonds are also not as material as they would have during a global recession. Traditional US safe havens are thus not as effective in a US-only recession. So while tariffs represent a near-term headwind, the broader risk lies in the US increasingly isolationist stance. Meanwhile, Europe's reversal of fiscal restraints and China's resilience despite tariffs underscore the growing competitiveness of other global powers. Diversification is not only critical in a volatile and uncertain environment, but also enables investors to capitalize on attractive opportunities elsewhere while waiting for US-related uncertainties to ease. EM equities and bonds, they stand to benefit from potential US dollar weakness. Additionally, gold offers effective hedging benefits during periods of US Un-Exceptionalism, providing portfolio stability and downside protection. The yen is also an attractive diversifier and has historically performed well when global investors seek safety away from US assets. That is all from me for today. As always, if you enjoy these podcasts, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.